Guys, I know Bitcoin is already at all-time highs, but thanks to entities like BlackRock, I think we may be entering a super cycle that takes us way higher for way longer. By now, you must have heard of the traditional Bitcoin cycles. You know, 2 years bull market, followed by 2 years bear market. But super cycle theory states that Bitcoin has entered a new paradigm where it's not going to do that anymore. And instead, Bitcoin could just keep going higher for longer without those brutal crashes of the past. So in today's video, I'm going to be making the case that we're indeed entering a super cycle, and I have 6 reasons in total to make that case, starting with reason number 1, the ETFs. Duh! Ever since the spot Bitcoin ETFs launched in January, Bitcoin has been on an absolute tear. If you remember, Bitcoin was around $46,000 at the time, but now that we've entered the post-ETF era, we may never see it below 50K again. If you think about it, the arrival of the ETFs and new all-time highs is not really a coincidence. That's because the ETFs are bringing in a ton of new capital into Bitcoin. In less than 3 months, they've already amassed over $58 billion in assets under management. For comparison's sake, that's over 43% of what the gold ETFs have amassed, but it took them over 2 decades. In fact, so many people are buying Bitcoin through these ETFs that miners simply can't produce enough of the orange coin to satisfy demand. And here's the thing, if history is any indicator, these ETFs could ignite a mega bull run for Bitcoin that could last a decade. You see, that's exactly what happened with gold after its first ETF launched in 2004. It entered an incredible 8-year structural bull market, which pumped the price 254% to an all-time high in 2011. And keep in mind, gold put in those gains despite being a low volatility asset. So if a similar fractal appears in Bitcoin's chart, the gains it experiences could be much greater. To be honest, a super cycle wouldn't surprise me one bit because these ETFs have also completely changed the narrative around Bitcoin for boomers and TradFi investors. What they once dismissed as a purely speculative asset now has Larry Fink's stamp of approval as a store of value.
You could say this is a great potential long-term store of value.
So with traditional financial advisors starting to recommend a small allocation to Bitcoin for every portfolio, these ETF flows could just be getting started. But anyhow, now that Bitcoin has a new narrative in the TradFi world, it's not surprising that we're seeing serious institutional adoption of Bitcoin. And that's actually my second reason why we could be entering a super cycle. Just take a look at what Michael Saylor has done with his company MicroStrategy. Back in the dot-com bubble of the year 2000, MicroStrategy stock hit over $1,300 before crashing and staying below $200 for the next 20 years. But then, thanks to their bold Bitcoin acquisition strategy, their stock has started to track the price of Bitcoin and finally broke all-time highs after 24 years. The Salvadors Success story is super bullish, not only because MicroStrategy is going to keep buying more Bitcoin, but because it's created a playbook for other companies to do the same. But when we talk about institutional adoption, we're not just talking about the public corporations that need to disclose their purchases. We're also talking about the family offices or hedge funds that now have a more traditional way to access Bitcoin through like Fidelity or BlackRock. If you think about it, that is much easier for them from an operational perspective rather than buying and holding Bitcoin themselves. That's why we can confidently say that the institutions have joined the party and their insatiable appetite for Bitcoin may carry us into the super cycle through their actions alone. But another major reason why we may be entering a super cycle is the success of El Salvador's Bitcoin strategy. You see, what Michael Saylor has done for Bitcoin in terms of corporations, El Salvador has done in terms of nation states. When they first bought Bitcoin in 2021, they had to endure a bunch of threats from the World Bank and the IMF. Then, when the price of Bitcoin dropped, they got laughed at on social media. But now the country is up over 50% on its daring Bitcoin investment. And that has paved the way for other countries to do the same. Sovereign wealth funds around the world are already in the habit of buying gold, so it's not a stretch to imagine that they could start buying digital gold for their reserves as well. Heck, it could already be happening. Edward Snowden recently tweeted out a prediction that, quote, a national government will be revealed this year to have been buying Bitcoin without having disclosed that fact publicly. Imagine if a country with tons of oil money like Saudi Arabia or Qatar had been secretly buying Bitcoin all along and then announces it publicly. Game theory dictates that this is the kind of activity that happens slowly, then all at once. So if nation states start to ape in, then others will quickly follow so that they don't get left behind. Plus, these are the players that have the deepest pockets of them all. So this kind of scenario could absolutely skyrocket the price of Bitcoin. And that's why I'm feeling Supercycle. Anyhow, that brings us to the next reason why I think we're entering a supercycle. The fact that all of this is happening against a highly favorable macroeconomic backdrop. You may have noticed that before Bitcoin hit new all-time highs in USD, it already hit all-time highs in a whole bunch of other currencies. That's because there's been extreme currency depreciation in countries like Argentina and Egypt over the past few years. Recently, Bitcoin went up 74% in a single day against the Egyptian pound. But even countries with developed economies like Japan or Australia have seen their currencies melt like ice cubes against the US dollar since 2021, further cementing their need for something like Bitcoin. And things aren't all rosy in the United States either, given its massive debt problem. The national debt has ballooned to over $34 trillion, with an additional $1 trillion added in just the past 100 days. Money printing is required in order to service that debt, and that leads to even more liquidity flowing into Bitcoin. Also, keep in mind that Bitcoin reached its new all-time highs with the Fed holding interest rates above 5%. A lot of analysts assumed that Bitcoin was an easy money phenomenon that couldn't do well in a high interest rate environment. But Bitcoin's recent surge has proved that theory wrong, but it could still do even better as interest rates start to drop. So all these macro factors are coming together in a perfect storm that could very well lead us into a super cycle beyond everyone's expectations. Now, that being said, Bitcoin is not just benefiting from the institutions, nation states, and sophisticated investors joining the party. Bitcoin is actually becoming fun again for your everyday retail investors. We're currently witnessing a full-on Bitcoin renaissance thanks to its whole new range of utility. Until recently, Ethereum dominated when it came to NFTs, but now that's changing. Bitcoin recently surpassed Ethereum in weekly NFT volume thanks to Magic Eden. That's the fastest growing NFT marketplace, which has carved out a strong niche for itself as the go-to Bitcoin NFT marketplace. That's resonating with users who don't want to pay the rising Ethereum gas fees on Blur or OpenSea anymore. Plus, there's new NFT type projects on Bitcoin that are experimenting with things that can happen elsewhere, like inscribing art onto rare satoshis and making generative collections out of digital matter. So with art and culture booming on Bitcoin, the usage on the chain is poised to grow. And then, of course, there's also the rise of Bitcoin layer 2s. I'm talking about things like Stacks, Interlace BOB, and Merlin chain, which focus on letting people build on top of Bitcoin. With these types of projects focused on increasing Bitcoin's utility, Bitcoin is looking stronger than ever as it enters a super cycle. Now, I've got one more super important point in favor of the super cycle that no one is really talking about, and that'd be FTX. Do you remember how huge FTX was last cycle? Well, even though all those FTX users were smashing the buy button on Bitcoin, SBF and his gang never actually bought the Bitcoin. So just imagine how much higher the price would have gone if those buy orders actually went to Bitcoin instead of the FTX-backed tokens that SBF wanted to pump. But now, with Sam in jail, ETFs being highly regulated, and the solid track record of Coinbase and BlackRock, it's looking like there's very little chance for the price to be manipulated this time around. Instead, the market demand for Bitcoin will actually go to Bitcoin, and that could lead to a massive rise that just keeps going higher. So there you have it, my 6-part thesis for why we're entering a Bitcoin supercycle. I don't know about you, but I'm really feeling supercycle. Let me know what you think though in the comments below.